All right, welcome back everyone. Here we're going to look at corporate income tax rates, and in this graph what you can see is for each range of taxable income, the income tax rate is shown. So for example, for taxable income from $0 to $50,000, the federal income tax rate is 15%. Meaning that if your taxable income is within that range, 15% of that will be paid as federal income tax. And then for $50,000 to $75,000 in that range, you're going to pay 25% federal income tax rate. And that is only going to be applied to the income that you made in that range. So for the first $50,000 of the income, you're only paying 15%. But after $50,000, as long as your income is less than $75,000, you're going to pay 25% for that portion of the income. And that goes up to 34% for between $75,000 and $100,000, and you can see the changes on income tax rate for different taxable income range. The same graph is also shown here in this table. As you can see, for less than $50,000, the tax rate is 15%. If the taxable income is between $50,000 and $75,000, the incremental, or also called marginal tax rate, is 25%, which means you're going to pay 25% for any income that you made over $50,000, but in addition, you're already paying $7,500 for the first $50,000 that you made. So that means this $7,500 is coming from 15% times $50,000, which was your first $50,000 income, and you should be paying 15% tax on that based on the first bracket. For anything above $50,000, you're paying $25,000. The same rule applies if your taxable income falls into $75,000 to $100,000. 34% is the marginal income tax rates. And it's called marginal because the 34% is only going to be applied to anything that you made over $75,000. Again, this $13,750 is coming from 15% times $50,000 plus 25% times $25,000. And that $25,000 is for this bracket between 50 and 75. And the same rule applies to the rest of this table. But here is an important point that I want to emphasize here. In investment projects, when you're analyzing their costs and their benefits over time, and you want to apply tax on their taxable income, if the company falls into, let's say, this category, $335,000 to $10 million, and their marginal tax rate is 34%, and you're evaluating a certain project that says if you make a certain investment, you're going to make so much benefit over the years. For that extra benefit that certain project is going to generate, you're going to pay 34% tax regardless, because that is an additional income that is going to be made in that company for that certain project. And we're going to look at examples of that later. So marginal tax rate is what we're going to use for evaluating projects and establish after-tax cash flow.